All right, hey there. Welcome back, everybody. It is, what is this, Tuesday, November 30th, 2021. It's just a few minutes after 11 a.m. Central Standard Time. I am Chris Franks with Texas West Capital, and we are here to look at the markets as usual. Hopefully, y'all over here in the U.S. had a great holiday time there with family and whatnot. Thanksgiving. We've got, gosh, oh Lord have mercy, we've got Christmas coming up now in just a few weeks, so my son keeps reminding me. Oh man, as a parent, it just seems like things are never done, right? So good to see y'all. Excuse me. Oh man, weather changing again. Got my allergies going, making me cough a lot. But anyway, other than that, I'm fine. How are y'all doing today? Who's here already? Alan, what's going on? Boris is here. Nevlusian Hankowitz, what's going on? Let's see here. Blaze is here. Crystal Mowgli. Mike Slane. What's going in, man? I'm so sorry, guys. I might be coughing a little bit as this allergy stuff tries to clear through my throat here. Let me see here. Hank's here. What's up, man? Pumpin' Jack Flash checking in. Wealth Build is here. He said, did Powell really say that? It depends on what you're asking if he really said. What's going on, Dana? Ventru is here. Andrew Bennett. Jared the Great. Man, oh man. So things going great, depending on where you're looking, right? If you're looking at stocks, things aren't going quite so great. But, again, it's something we've been prepared for a while. It's doing its thing to confirm that top really may be in. And then we have the comments by Powell today, which had that knee-jerk reaction in the market. But, of course, the market was already headed in that direction. So, you'll get a lot of people saying, Powell's remarks did this, and Omicron variant news last week did that. And really, guys, at the end of the day, it's just that's where the market was already headed, right? But you guys know that. You guys are smart. You've been here a while, right? So nothing to surprise us here. What's going on, Goldocker? Scotty, LXT, just in time. Let me see here. Except when you're shorting, LXT says. Andrew Bennett saying that Ethereum looking solid right now. So real quick, guys, we have our Cyber Week sale going on here. So this is only for the Tier 3 6-month and 12-month memberships. You're going to get a 40% discount. But here's the kicker, guys. This is the last time we're ever going to offer 40% or more on our discounts. From now on, it will always be less. And there's a reason we do that. It's because if you don't know, it's unfortunate that you don't know, but the amount of content that I produce over there in a month is just ridiculous. Every new member always just goes, holy crud. I mean, they're really just taken back. I don't know where to start, Chris. Where do I start? But there's so much stuff here. And that's what it's all about, though, guys. It's about getting you all the information and then you deciding what it is that you like, what it is that's important to you. And then you pay attention really to that, and you can have, you also have that other information you can look at too as maybe your needs or your desires change. But it's there, man. If you're trading stocks, if you're trading Forex, if you're trading cryptos, if you're trading metals, if you're trading commodities, oil, natural gas, all that stuff. We've got all that in there, guys. Plus, of course, Tier 3 chart request, chart critiques. We've got the 3 live streams every week for an hour, teaching you Wyckoff, Elliott Wave, and other strategies, rules-based strategies to trade with there. There's just so much going on, guys. I mean, I can't say it enough. If you haven't checked us out on Tier 3, you really don't know what you're missing. We just had a Tier 2 member upgrade to Tier 3, and it just blew their mind how much that we do beyond just the Tier 2. They were happy with Tier 2 for the long time they've been there, but Tier 3 just totally blew them away. So anyway, this is it. Come Sunday, guys, that's it. We will never have 40% or greater discount. So jump on in there. You go to howtotradetowin.com. Use the code here, CyberWeek, 40% off. Or to get to the website, you can use this, what do you call it here? This, doggone it, this thing right here. I can't remember what it's called. A QR? Is that what it is? No, I can't even think. Anyway, but this thing right here, just scan it with your phone. It'll take you to the website. Anyway, I hope you guys will join in and do that. A lot of smart people taking advantage of that there, if they've already got time, adding on to it just so they've got this great discount before, that's no longer offered so they can continue to remain on a relatively inexpensive basis per month there. So anyway, guys, be sure and check that out, all right? Let me see here. Who else is here? Wazobia Dollars, what's up? Crip. I don't know if I can say that. What does it say? Christofferson? I can't even say it, man. I almost look like an idiot trying to say it. Anyway, glad to have you checking in. Telluride here as well. QR code. Yeah, that's what it is. Alan and Telluride, appreciate you guys. QR code. That's what that thing was down in the corner. Anyway, by the way, we're going to finally be launching the new website at texaswestcapital.com. End of the week, the weekend, somewhere around there. We're going to have that. And at that point, we're going to start offering even more stuff. So a lot of exciting things going on, guys. Man, I'll tell you what. And coming into Christmas, what am I thinking? I'm already busy. But anyway, so there we go. Let's see here. What did Powell say? Oh, my gosh. So I've been talking about it for a while. I've been talking about this reality, since the beginning of this year, that Powell and them were going to have to taper sooner than they want to, and that they were going to have to then raise interest rates sooner than they want to. And so finally they did mention that they were going to taper there in November. And then they said no, but they don't want to touch interest rates. The taper was, if it was going to was going to last through, June or whatever of next year. And then they were going to do the or what do you call it there? Interest rates. They're going to raise the interest rates after that, right? Well, now Powell's in there and he's like, well, you see, here's the thing. Inflation's really strong. The economy's doing really good, and we're probably going to have to taper in that taper sooner. So he expects they're going to talk about that in December. Remember, they left open. But remember, they said they were definitely going to do $15 billion on the tapering per month for November, December, right? And then they left it open after. They said after that, they might continue with that, or they might raise or lower it depending on how the economy's doing, right? Well, now he's saying, well, that economy's really hot. So we're probably going to go ahead and do it a little bit sooner there. We think we need to. If you remember from the Fed minutes last month, they were already talking about, the board was ready to raise interest rates and end tapering sooner if need be. And, this is just the same thing I've been talking about for the last year, guys. So here it is. Again, well ahead of what they were saying there. Just the needs. You can't keep doing what they're doing here with that interest. With the inflation. I say inflation, God, because everybody uses the word inflation, but just the rise in prices, right? Because price rising isn't inflationary. I mean, that isn't inflation. Inflation's the growth of the money supply. That leads to, if it hits the market, then it leads to a rise in prices, but you're not adding more prices. That's what inflation would be. Adding more prices. You're not adding more price. You're just raising the price, right? Anyway, I'm just a stickler for how things are said, guys. Because so much of what we do in this life, so much of what we say is misinterpreted, and heaven forbid you try and text it. You young guys are out there texting all the time, man. Talk about letting people really misunderstand what you're saying. It's hard enough to get people to understand what you're saying just by speaking it, because words are so imprecise, language is so imprecise. But man, trying to putting it into text, it gets so much worse. Then you have you can't look at body language or voice inflections or anything to kind of figure out, are they kidding? Are they being sarcastic? Are they being real? So. But anyway, impreciseness of language, I think, is a big cause of a lot of problems we have around the world. So I don't like to use the word inflation for rising prices. Inflation of the money supply, adding more dollars, can potentially lead to rising prices if those dollars enter the market. And so you've got more dollars than chasing limited supply. So anyway, I hope that makes sense, guys. It's just one of those things I'm a real stickler for. I try to be as precise as possible, but it is what it is, Let me see here. What's going on there? Data says, if people ask me what they can find on Tier 3, I listed things like this. For some time now, I replaced my default answer of listing things with just saying yes. Yeah, it is, man. I'm always trying to add more to it. So we already got a lot out there. You're going to get more content, guys, and more that you can do for yourself than you're going to get anywhere else. You go out there looking for people to, you're looking for people to tell you where to buy. I've listed the issues with that so many times before. but you really do nothing for yourself, right? You're basically spending money that isn't getting a return, right? But man, if you learn how to trade, you're just gonna be so much better off. But do what you need to do, right? Hey there, Train. I am well, thank you. I hope you are too. I always want to say I hope you are as well, and then it just sounds weird. GT, what's up, man? Checking in from Washington. Chris Claus. It's good to have you back here, Brian Allen. Let me see here. Southbound Traveler says this channel is better than BitBoy. Just saying. Okay, I don't know what a BitBoy is, or I don't know if that's a person or something. But hey, that sounds like it's a compliment, so I'm going to take it as such. I appreciate you. Thank you so much. Hey there, Brian Rowley. Good to see you here. Yeah, Hank, I know everybody's using the word inflation commonplace for, just the rise in price and everything. I haven't ever been able to do it. It would drive my economics professors nuts as well. I mean, they agreed with me with what I was saying, but they're like, yeah, but we use that term here. Like, yeah, you do, but, it doesn't, just because you use it doesn't mean you should be using it, right? So, it's just crazy stuff, man. But anyway, Yeah, a lot of people just aren't even very good at listening, no matter how precise you are with language either. And that's a big thing we have here, guys. And so, we talk about what's going on here. And so, Powell says, like he says, it's probably time to retire the word transitory to describe inflation. And he does it. He goes on to describe it. He says, because, people have different understandings of what that word means. Some people think it means short term, Powell says, the way we use it, that they use it there at Fed, is to mean it's something that's not going to leave a permanent mark on what's going on. In other words, it's not going to be permanently inflated, right? And that, to me, is the proper way to understand it. But again, as Telluride said here, people don't really listen, and then they kind of come up with their own ideas. And it's all part of this, soundbite, meme kind of thing going on, guys. So if you want to differentiate yourself from the average trader, which the average trader loses money consistently, one of the things you can do is to listen better. Don't just sit there waiting to say something. Listen to what's being said and consider it. It doesn't mean you have to agree with it. But if you aren't truly considering these things, then are you really listening? And you're not. And if you're not really listening, how can you pay attention enough to the market to understand when it's telling you that it's doing something different? You're not paying attention, right? You're not paying attention to the degree you need to. So, yeah, definitely, do what you can with that. Okay? Make sure that guys, there's so much you don't understand. Many of you don't understand yet. There's so much of the issues that you're having with trading are really just you. This is the big thing. It's the thing I try to get through every stream here, is that the most difficult person you're going to have to deal with as a trader is yourself. It's not Wall Street. It's not crypto whales and all that other nonsense. That's just putting the blame everywhere else. And because you put the blame everywhere else, you don't understand that it has to do with you. You refuse to accept that, which means you can't move beyond, which means you will continue to do the same thing. You will continue to lose the money. And finally, at some point, you're going to be out of the market and you go, man, Wall Street took my money. They manipulated me. They stole my money. Crypto whales, they stole my money. That's what you're going to say. And that's just the silliest thing, especially with all this stuff that you can actually control. All right? Let me see here. Let's see here. Is Bitcoin charting similar to last year at this time, expecting a Q1 bull run continuation? Well, we didn't. Last year. I think you're better off looking at maybe like previous periods, in which case you'd probably be looking better off toward maybe 2011, 12. It hasn't really rallied yet, like we would normally expect it to in November, which, you remember I told you, I said we're looking at December kind of being this this end date for maybe for the bull cycle, right? But with the understanding that it may very well continue into maybe even Q2 of next year, right? And so I think, based on what it's doing right now, I think there's the possibility that it really may kind of continue on into potentially Q2 of next year. So we're going to see. I'm not, we'll see how it goes over this next month here. But, I don't know. With the count at where it's at, I don't know that there's enough time left for a significant enough rally to finish up. But maybe, again, we're just going to play it, as it comes day by day, right? But anyway, so this thing Powell said right here gave that knee-jerk reaction to the markets. The stock market indexes dropped, but they were already dropping, guys. They were on a wave 3 heading down or whatever as it was. Of course, the dollar spiked up, which took, your USD yen, your USD CAD up. You took your cable USD down, your Euro USD down, Aussie dollar USD down. So, just the things you would normally expect when that happens. But really, this hasn't done anything to change what we were already looking at in counts and whatnot. This is just in addition to it, what's already happened. Price was already doing in the grand scheme of things what it was doing, whether it was down or up or whatever. This just gives you a local knee-jerk reaction on it, just like what potentially happened there at the end of last week when the whole Omicron or whatever variant of COVID was mentioned. And all the news sources tell you, oh my gosh, things dropped because of this or because of that. And this is what I keep telling you guys, man. This is the idea. The news media will find a reason after something happens to blame it on the reason for that happening. But the bigger picture says, look, we were already doing this. This is just a local knee-jerk reaction, but in the grand scheme of things, we're already doing this thing. But, again, most people, guys, most traders go through their lives and they never understand that. They never understand that they're always chasing news. To them, the news is always what moves the market when it's the other way around. So if you want to be a better trader, understand what I just said there. The news isn't what's moving the market. The market moves, and then the news just is something that they put onto it, some label they give the movement later. So, yeah. Let me see here. Brian Allen says, I'm watching all the videos, and sometimes the more I learn, the more confused I get. I wish there was a beginner homework of some sort to see if I'm understanding each marker. So here's the thing. With that new website we've got coming out, we're going to have new videos that we've already got all those hours and hours of education there. We're going to have new videos coming in, and they're going to have like quizzes with them and everything as well. So it's more than just watching it. It'll be, let's answer the quiz here at the end and see if we really understand what we're talking about. So be excited for that. Let me see here. Ali, what's going on, man? Checking in all the way from Norway. Winter is coming, like literally. Well, it was cool over here in Texas, too. I think we got down to like 40 degrees the other night. But I tell you what, after last year's ice storm, man, and winter storm we had over here, I don't know if you guys were around back then. We were like less than 4 minutes from the entire Texas electric grid shutting down, which would have taken supposedly 2 months to get it back up and running again. We don't want to see any of that this year. Get the generator going, right? Hey there, Sylvia. Good to see you. Let me see here. Mr. Peter Brandt believes that you can't determine where you are exactly in a market at any given time. Elliott wave theory. What's your opinion on that? Well, it is what it is. We've shown time and time again you can, right? So I've been doing this for a few years here publicly, and we've seen time and time again that you can get, at the very least, a good general understanding of where you're headed, and many times a pretty precise indication. So I just think, it's just people that don't understand. Again, the idea of Elliott wave is just the understanding of human nature. And we're not random. We're not, we tend to do things in cycles and in ways. We tend to move back and forth emotionally from our median, but we always come back toward that median, right? And so the market is just that in the aggregate. It's just the aggregate of that, right? And so, it works fine. He doesn't believe it. That's his deal. It just means that, it's just another way of looking at the market. That's all. Let me see here. Who is this over here? I can't read. You got red on blue here. David Gibson, what's up, man? He says, so basically ignore the news, do due diligence, background research on coins instead, then actually watch the charts. You know what? I don't even think due diligence background is needed. I have not really done any real research on any coins since I've been in crypto here, actively trading, which was beginning of 2017. So what's that? 4 years now? Almost 5 years. Done extremely well. I've done extremely well, and it's because I don't believe that the market itself really is all about fundamentals at this point. Anyway, I think it still basically is. If Bitcoin's doing well, everybody kind of does well. If Bitcoin's, craps on the pot, everybody else kind of takes it for the most part. You always have those, it's like anything else. You always have those that buck the trend. Again, when we hit the 2017 all-time high, and then Bitcoin came down afterward, BNB continued up. In 2000, whatever it was it 18, 19, whatever, where Bitcoin was coming down. I guess that would have been 2019 or so when it's coming down. Anyway, Link continued to go up, right? So, I mean, there's always something out there that's going to buck the trend. But, I mean, I don't think that really makes a whole lot of difference. But here's the thing. Even if it could give you something, you can still just trade the charts without needing to understand all that, and do extremely well. If you look at fundamentals, when you're looking at stocks, you look at things like PE ratios, you're looking at float, you're looking at all these different things, right? You're looking at their books, basically, right? And I'll tell you what, most people out here are not well enough trained or educated to be able to do that realistically, to be able to do it well enough to use it as trading guidance, okay? But we can all learn to look at the chart and understand how price action moves and trade that. And so, you've got these two, in trading, you've got these two different sides. You've got fundamental traders, and you've got technical traders. And they're always arguing back and forth. But at the end of the day, guys, I'm here to tell you, 25 years of doing this, I can do both. Trading the charts is a lot easier. It's a lot faster. And it's more widely available for people to do successfully than it is trying to learn how to read balance sheets and all these kind of things, which a lot of times, takes some sort of degree in accounting to really make sense of it. I mean, you can look at it and you go, okay, well, yeah, here's the numbers doing this, but, unless you really understand business and what's going on with those numbers, it's just numbers, right? So, yeah, I mean, I don't necessarily think that any particular coin has such great team that it's going to just do fantastic because of the team or whatever. These coins are still really driven by the idea that people are going to buy them and then sell them because they figure other people are going to buy them at a higher price. It's all speculation right now based on just price action or this hope that it goes up higher. There's not a whole bit of, that's a really great team, so that's going to keep it going, anything. And it's just my opinion, guys. But I don't see it there yet. I see it maybe starting to, but this was something I talked about in 2018 when we were in that bear market. I said this next bull cycle, we would start seeing that sort of thing. And so, we're starting to see it, but I don't think it's anything significant yet that it makes a whole lot of difference what we do. Excuse me. Because the charts just tell you what people are doing, and how people are feeling, right? And that's what we're looking at. Remember, we're looking at that social mood. How in general, how are people feeling? Are they feeling upbeat or are they feeling downtrodden? And however they're feeling, the market's going to show that. It's not that the market does these things and then people feel like the market moves up and then people feel happy. No. People were feeling good. That's what caused the market to rise. So your charts show that rise. If people aren't feeling well, aren't feeling positive and about the market and where things are headed, whatever, they're not going to be buying it. So it's not going to go up. It doesn't just rise on its own, right? You have to have people actively buying and people not actively selling, right? Or at least in greater degrees of the former, not the latter, right? So when you're looking at the market like that, guys, just from that simple rational understanding right there, you should understand that what's going on in showing you on the charts is telling you how everybody feels. It's not the other way around. It's not going to make them feel better or feel worse. They're already feeling good or they're already feeling worse. So, yeah. Let me see here. Just in Time believes that research gets you tied to a good project emotionally. Yeah, and there's a lot of chance in that, especially if you're a newer trader, guys. Here's the thing that people aren't going to tell you because they want you to buy their stuff and they want you to send them money because that's how they make their money. But the reality of it is, if you're coming in as a new trader, you are already behind the eight ball because you are going to be emotional. We're human beings. We're emotional. That's what makes us human beings. That's a great thing, except in the market. So when you first come into a market, and what I mean by that is not necessarily the first day, the first week, the first month, maybe even the first year. That's all still new to the market. You're still emotional if you haven't moved beyond that, right? And so if you're already emotional, then you are, just so you guys know, you are looking for things to confirm your emotional bias. So if you are emotionally bullish, which is why you come in, because prices are doing well, you want to get in on that, right? So you're emotionally in on that. You don't know what you're doing. But you're jumping in saying, man, I need to make that money, or I need to be a part of that. And what that does, then everybody starts talking about these different coins, these great teams and all this stuff, right? And you're like, what? Really? Okay. So you go and look it up and you're like, yeah, I got that. I'm biting. And all you're doing is confirming your emotional bias. You're going in there with an emotional bias and you're looking for things in that to confirm it so that you become more emotional. It kind of supports your emotional bent on the market, right? The problem is if the coin or whatever you're looking at starts pulling back, you still feel emotionally bullish toward. You're like, oh, it's just pulling back. They're going to kick out here soon. They're going to do good, whatever. It's the same thing with XRP the other way, right? All the people online, oh, XRP is terrible. It's blah blah blah, right? And that's where I made stupid money, right? Buying it at below half a cent and selling it almost $3, right? Back during 2017. That's huge. That's huge, guys. That kind of return. Figure it out. It's ridiculous. But I was doing the opposite of what many people are out there yelling about, right? And so then it goes up there and everybody still talks, nonsense about it, whatever. And then, of course, the whole idea of the SEC thing, and it gets dropped down. And I told you, I said, everybody was getting rid of it. Coinbase and everybody else, right? And I said, you know what? Here's the thing, guys. I said, this is likely, worst case scenario is they're probably going to get a smack on the hand, have to pay some kind of fine, and that's going to be it. And we're not even there yet. But I said, that's probably the worst case scenario with all this. And I said, so what's going to happen is down here where it had dropped off all that because of all that news and Coinbase and everybody else delisting it, right? I said, whoever can get in and does decide to get in here around the bottom, I said, is probably going to end up making a killing. And here we are again, right? Rallying right the heck back up. So, what you'll notice online, especially with cryptos, is a lot of emotion. Try not to be a part of that. Do the best you can. And the ways you can help yourself do that is learn proper risk management and then start understanding why and how the market moves like it does. If you can do those two things, then you're not liable to jump in on FOMO and fear and jump out on fear because you have an idea of what may be going on, when price moves suddenly. Or you have an idea that sudden move, might be coming up. And even if you don't, whatever, you have proper risk management, right? And that proper risk management is going to save your rear end anyway. So you're not all that emotional anymore. But, otherwise you're coming in and, you're going to be a ball of emotion. And the important thing is to understand that and then to do what you can to kind of pull yourself away from that. Okay? So yeah. Let me see here. Oscar, what's up, man? He says, I browsed Michael Saylor's Twitter for like 15 minutes today. I feel like I lost 10 IQ points permanently, so I can sue him somehow. Can I sue him somehow? Yeah, and here's the thing, guys. You guys, you have to remember, this is what I keep telling you. You come in and you get romanticized by these big accounts, right? Pomp, and whatever his sidekick is, Jason or whatever his name is, I don't even remember. And then, Michael Saylor and all them. And as a new trader, that's not a very good thing to get involved with because they're very emotional. They use emotional talking points to get you to buy in emotionally. That's what they're trying to do. Because what they're doing depends on you buying in emotionally, right? Pomp and Jason, whatever, they're part of that investment company. that has, trying to get people to invest in Bitcoin and to do it through them, right? So, I mean, it's their business, guys. Michael Saylor, he's buying a whole bunch of Bitcoin. Maybe he's drank the Kool-Aid. I don't know. I'm not convinced. I've been around enough very, very wealthy people in my life to know that they're rarely what they say they are when it comes to, oh, I'm definitely not doing this or I'm definitely doing that. They say it often. They rarely follow through with it. So, with a huge sell-off that comes, would Saylor be willing to hold on to what he has? I'm not so sure. Maybe he will. But does that make him, is that a reason to follow him, though, and to get emotionally into what he's selling? I don't think so. Again, guys, this is 25 years of doing this. I see a lot more damage, a lot more potential issues that you could have from doing that than not. So just be careful out there. I mean, things, new projects need people like Saylor and the rest of them out there pumping it, maximalist. Oh, gosh, yeah, great stuff. Because that's what gets everybody else's attention. And that's what they need to potentially move it into the mainstream. Okay? But just because it's what they need doesn't mean you need to follow that. You know better right now. I'm telling you straight out what's up. So you know better now. So, try to do your best not to get emotionally taken in with them. Because unfortunately, most of the time, that's going to lose you money. All right, guys? Let me see here. Michael says, Bitcoin maximalism is no different than a religion. It would be stigmatized, except it's related to making money. Generally turns normal people off. Yeah. Well, again, they're the ones out, any new project, any new thing really needs that. As I've said many times before, because that's what those loud mouths, those continual rah, 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 no matter what, getting out there in the face and whatever, doing all this, that's what gets it far enough into the mainstream where enough people start using it and being a part of it that it can become something. If we don't have them, it won't. It doesn't do that because people just ignore it, right? And so, my suggestion again is just be careful if you guys are finding yourselves, becoming emotionally. Either way, guys, emotions, excitable emotions, or just really downtrodden emotions, based on what people are saying and doing there. I mean, either way, it's going to end up costing you a lot of money. So try to not do that. Let's see here. Let me kind of catch up with you guys here. You guys don't like Bitcoin maxis, huh? Yeah, exactly. It's just about the emotional influence, guys. That doesn't mean there's not information that you can glean from these people. It just means it's just a reminder to make sure that you're honest with yourself about what's going on. Okay? Because if they're wrong, it doesn't do. They have no concern about you. They don't care that their incessant rant, rah, got you to buy in at some point, and then you end up losing money. They don't care about that. That's not their concern. It has to be your concern, though, okay? That's what I'm trying to get across here. It has to be your concern. You are the only person responsible. Even if you're following somebody else's signals or something, you are ultimately responsible for the trades you make because you are the one making them, period. I mean, and especially, my God, guys, if you're getting them for free or you're paying $100 a month for signals, and you think, oh, those signals aren't working out, and you want to blame that person, you can't blame that person. It's $100 a month. Here's the thing: if you want to pay for signals that really pay, you should expect to pay probably thousands of dollars a month, because taking in thousands of dollars a month for that kind of service means those people are much more likely to be less cavalier about their about what they're talking about. They want to be more precise because it'll cost them a lot of money if they're not, because you won't be there anymore, right? There's a certain level of expectation when you're paying thousands of dollars a month versus otherwise. So you've just got to pay attention to all this, guys. Let me see here. Let me see. Can we assume that Michael Saylor and the like have AI systems constantly monitoring risk and using derivatives to short when necessary? Can we also assume that Saylor would be buying real Bitcoin while manipulating the market via derivatives? I don't know that we can assume that, I think that's that's always a possibility. But remember, Saylor himself, he's not a trader. Saylor is not a trader. He's a businessman. And the one thing you guys have to understand, something I've said before is, and something that I reiterated from Wyckoff, if you read his book, which one was it? Oh, I can't remember which one it was, but I talked about it before, where he noticed when he was working, taking in orders and whatnot for the markets, for the broker, that he noticed that the businessmen were not all that great at trading. They just had a lot of money and they were just throwing it in the same as everybody else. Again, there's a difference between having a lot of money and being a good trader. And so Michael Saylor and people like him generally aren't traders. They're just, it is what it is. Now, could they maybe hire somebody to come in and do that kind of maybe, sure. Manipulation, though, outright manipulation, attempts at manipulation, I don't know. I don't know that things can be outright manipulated in the market, really. Because if the market is really bullish, if it's honestly bullish, the manipulation isn't going to work. And this is something most traders don't ever actually get to the point they understand. Or if the market is really really feeling down, really feeling bearish overall, what we try to do to manipulate it, it's not going to really do anything. You might get a knee-jerk reaction, but that's it. You're not going to get a real change in trend. And I don't think most traders actually actually understand that. So, yeah. Let me see here. Once the crypto market is below off top, will the bear market be as harsh as 1819 with a 90% correct? I think it will be. I think it'll be at least that. I mean, if this is a fifth wave coming up from the start back in 2010, which is what I think we're doing, getting that fifth wave, yeah, we can expect a pullback of that fifth wave of the last 12 years. That would be what it would be based on. So I think it's really quite significant a possibility here. And again, if we're looking at a minimum of a recession, potentially a depression, oh yeah, it's right in line with what we're looking at economically. Again, people say, Bitcoin's great. It's going to replace the dollar. And, hey, listen, it's going to be out there doing this thing, right? And if there's inflation or whatever, it's an inflation hedge and all this nonsense. The fact is, the only thing Bitcoin has proven is that it is a risky asset. And risky assets, historically, are sold off in risk-off environments. I mean, that's if you want to be just outright honest with you, that's what usually happens. That doesn't mean that has to happen. It means it's likely to happen, right? So, again, I think that's kind of where we sit with all that. Let me see here. So anyway, here we go with Bitcoin here. As you can see, we've got some Wyckoff labeling going on here. This, I think, it looks like this may have just been a terminal shakeout here. We've got our range, a bit of a spring at the end, and this nice, huge rally here. So in Discord, we were watching this range here, looking for that breakout. And I said if we got that breakout above this area here, we were going to rally pretty easily up toward this resistance up here. And so that's what we've done. This is the wave 4 up here. And so that's exactly what we got there. Nice big rally. Pulled back, rallied more. Pulled back overnight. Dipped just below my target range here. I said we're potentially going to get this. This is the 1 hour demand block here. And we got to dip down below it, right back up. Rally back up to a new high. Now we're pulling back. If I'm looking at this, I've got this as a 1 with a flat as a 2 here. And then this is maybe just a like a 1, 2 here. And so within this, you get basically this 1, oops. So we can kind of, so you got a flat correction, it looks like, for wave 2 here, possibly. And then this gives us this likely a 3 right here, 4 right here. And then 1, 2, 3, 4, 5 or so, you know, kind of getting up there as a 5. And then we have this right here as what appears to potentially be an ABC here. So what we're looking for is initially an impulsive breakout back above this. This is all inefficiency of this big, huge move down. That's an inefficiency, and usually you're going to rally right back up through it. So we're looking for an impulsive breakout above wave B, the 15-minute pivot here, to kind of carry us back up here toward that 15-minute R1 pivot up here toward the wave 1. And so, you know, if we're getting that, you know, that should get us that wave 3 in progress. Right now, we've got a wave circle 3 minimum expected target of 63,891. If we zoom in locally here, 1, 2 right here, that would give us a minimum wave 3 up here around the R4 pivot, 61,940 kind of area. Maybe up here to the pivot, it's 62,194. So basically that kind of area there, a few $100 area. And then we get that wave 5 right there at the R5 pivot on 15-minute, but we've still got wave 3 just a bit higher. So I think wave 3 and or 5, waves parentheses 3 and or parentheses 5, are going to overextend so that we reach wave 3 up here. Now the only thing that changes that obviously is if we drop below wave 2 here, which likely will signal that we'll drop below wave 2 over here, and then we got to figure out what the heck's going on. I'm not sure at the moment what that would be. This looks pretty legit as a as what we've got going on here. You know, is a flat correction here for wave circle 2, and then a new break up here for wave 1. So we'll see. We'll see if we can get it. If we're dropping down back down below it though, we can probably look right here between the 61.8 and 65% retracement level, which was up based off of this wave 1 here. So that EQ is right there around 55,092, or we can look right down here at the HVN at 54,364 or so. Those would be the two levels I'd look at if we were to drop below that wave 2, circle 2 over here. If as long as we're breaking up out of there, we should be ready to head up out and continue going at that point. Let's see here. Let me see. Let me see here. Volume showing a reverse. Andrew Bennett wants to know volume showing a reverse on Bitcoin. Inverse head and shoulders. Where are you talking about? Are you talking about here maybe? Or are you talking about, I don't know, in here somewhere? I'm not sure where you're talking about there. Maybe you're talking about this, but I wouldn't call that an inverse head and shoulders. I don't know. I mean, I guess you get like a complex here where you've got two left shoulders. So boom 1, boom 2. And then you would have to have two heads as well. And then I don't know, do you have two right shoulders here? I don't know. I think we're getting quite complex in that. Usually your complex head and shoulders just have one, like an extra left shoulder or an extra head or an extra right shoulder. Very rarely will it have two. I don't know that I've ever seen it have three, all three of them as extras. But yeah, I don't know. Maybe. You're saying on the 4 hour there? Yeah, see, that would still have to kind of be, you'd have to have two heads here, a double head down here, and you have to have two left shoulders here. You wouldn't start it right here because it comes on this downtrend. Remember, you're looking, when you're doing your head and shoulders, your left shoulder should be the bottom of that downtrend. So you have a sharp downtrend that ends at that shoulder, rallies back up, and then one more dip lower for the head, and then back up, and then that higher low for the right shoulder, and then up. So, but it doesn't stop there. Instead, it does there, boom, and then does again. Like I said, two shoulders, two left shoulders, and then two heads, maybe. But this is really short here for a right shoulder area compared to this over here, even for just one of them. This is a very truncated, very short, small kind of thing going on here compared to just this one or even just this one. So that makes me very iffy as far as that goes. What I can say is on the 4 hour and the 1 hour here, the fact that we moved up, pulled back, we retested here, pulled back, coming retesting here, coming. We're finding support on this pivot, which is a generally bullish sign. But now again, we want to see that breakout above that swing high. if you're just trading in terms of structure and pivots. You want to see that breakout above that swing high there because we've got the support so far on the pivot there. Yeah. Let me see here. Weekly MACD is about to cross over. Man, the week just began. It's way too early to see what's going on with the weekly as far as the MACD goes. Let me see what you're looking about here, talking about. Oh, there's tons of room there. Yeah. Yeah, it's still way too early in the week to even look at that, to consider that it's something's happening. I mean, you had this right here. Right? I mean, what you're saying right here is the same thing as what you're saying you could have said right here, right? So, you know, I would definitely not be too concerned about it at the moment. It may, and if it is going to cross over, it may take a couple of weeks to cross over, 2-3 weeks. So yeah. So yeah, if I'm looking at that, that's kind of what I'm thinking on that. Let me see here. What else we got going on? I mean, really, I mean, at the end of the day, guys, looking at this weekly here, all we've done is we're just right now retesting this previous area of resistance as support. That's all we're doing. I mean, big picture, guys. Let's get out of the 15-minute charts. This is what we're doing. We broke out above the all-time high there, pull back right into this previous area of resistance, getting a support. Last week, we have this nice, almost a hammer candle coming up off that. And so we'll see if we can get some follow through this week. But, I mean, in the grand scheme of things, that's all we've done at the moment. So, and if we get a good solid test off that, that should take us up nice and well. Because that's that last bit of resistance right there at that all-time high area, which we can use as support. You know, this is all the way over here from the 15th of February, the week of the 15th of February through the week of the 10th of May, right? So that's all. It's basically 3 months of support in this area here, right there. And then right below it is this one right here. So it's this whole range right here. We've got all this support. So I mean, you know, I don't get too concerned on the big picture at the moment. It's right now it's just at that, doing that thing. Let me see here. Yeah, I can talk about the Ethereum chart here in a minute. Let me see here. Brian, what's up? You just bought the Black Friday TradingView deal? I'm doing tutorials now. Yeah, I just bought it too. I did it this morning. I noticed that my expiration on that was going to come up like August of next year. And I figured, shoot, I might as well just go ahead and do it now and get the, instead of paying the full price then, right? Get the extra month and everything, so. Let me see here. Let me see here. Can I catch up with you guys? What's up, Esteban? I see you there. Let me see here. Let me kind of catch up with you guys. Just kind of seeing what you've got here. If you've got questions going on. Let's see. Michael says, if you draw a parallel channel from the February 21st high to today, Bitcoin has dropped back in and interested. The top of the channel is resistance. If you draw a channel from February 21st. Let's see here. So I've got to zoom in now more, right? Let me go ahead and make a copy of this real quick so I can use a different chart. Just so I can drop on there a little bit better there. Kind of see what you're talking about. '21st. This one here. Where the heck is the 21st? You did say 21st, right? If you draw a parallel channel from the February 21st highs to today. February 21st. That would be right. Okay, that's right there. Okay. That's what you're talking about right there. Let me see here. Yeah, I mean, I guess. But really what you should be interested in is this kind of area right here. Yeah, more or less. Kind of this area here. And all we're... Oh, yeah, okay. So all we're doing is kind of hitting the EQ of this area. You know, you're getting it kind of like at the lows in this area, which is the highs here. And then up here, more or less, these kind of highs area. I don't know, I'll probably pull it down a little bit there. Yeah, kind of lows there and highs there. Yeah. And all we really did is hit that that EQ right there and rallied up through it. Hit the pivot. And so then just pull back and cross over, right? I mean, if you want to talk MAC crossovers, I'm much more interested in this because this is the daily. And it's closer than that weekly on the bearish cross with a bullish cross here, right? So, I mean, you know, if you want to talk MACD crosses, the daily is setting up for a move up. We'll get new daily pivots tomorrow. You know, this is the daily pivot right here where we're at. But yeah, I mean, you know, it looks pretty all right at the moment. The other thing, though, let me zoom out here. Is the daily? No, it's not the right chart. Let me get my other Bitcoin chart out. Yeah, maybe it's this one. There we go. I think this is more compelling. This drop right here. I keep forgetting to show this to Discord. Sorry, guys. I keep thinking about it earlier in the day and then I forget to do it when it comes to the updates. But that right there, I mean, there you go. Boom, bounce off there, and there you're going back up. So, I mean, I think this is probably a more compelling thing, this ascending channel from back down here in July to where we are now. So you had a swing low, swing high, swing low, swing high, swing low. I mean, you've got four alternating touches of this channel. That's a pretty legit channel. Now, it doesn't mean it can't break down, but, you know, that's pretty legitimate right there. I'm much more interested in that. And then, of course, you know, again, if you add on what's going on here with a potential breakout back above here on that MACD cross potentially, yeah, maybe, right? Let me see here. Let's see. No, dollar's not going down. The Fed's talking about what I've been talking about, which is they're going to have to likely taper sooner than what they want. Finish that taper sooner. Get those interest rates raised sooner. And so that's all bullish for the dollar. Sorry for you if you're opposite of that, unfortunately. You know, things still playing out as expected with the dollar right now. We'll see if it continues to do so. You know, jumping on in here. Look at that big old rally this morning off that potential wave 4 swing low there. So I've got wave 5 in progress here up to a minimum target of the 1 hour R3 pivot up there around 90, almost 98, 97.95 area. I mean, there's your bigger picture. I mean, I don't know how you don't be bullish, you know, how you're not bullish maybe off this. Yeah. I mean, it almost looks like an Adam and Eve double bottom here. Though I wouldn't be a fan of that because the head and shoulders structure or the double bottom structure would take up almost the entire downtrend here. But still, got a sharp reversal, a little bit more prolonged reversal going on there. On the daily, we've almost reset into oversold. You know, so probably further upside. 3 days still up there. Weekly still's got room. Weekly, we're above that weekly pivot. Of course, these weekly pivots will change January 1st, you know, for the next year. So they'll change then. But, you know, we've broken out above that swing high, which is what I was looking for. We've broken right up into here, which is where we're getting some resistance. I mean, but look at where it's coming there. Right there at the previous support right here, right? So you pull back and you push up into it. We've got inefficiencies all along here. So if we're breaking out above 97.8, that should have a nice run up here to, you know, almost 100. We should be able to run through this inefficiency pretty easily. Carry it back up there. So, yeah. Let me see here. Shouldn't I be looking at the CME? Why would I look at the CME? How about the gap? What about the gap? The weekend gap? Weekend gaps are just weekend gaps. They're nothing special. They're not often filled. There's a difference between the types of gaps you're looking at. You know, is it just a normal weekend gap? Is it a breakout gap? Is it you know, a reversal gap? I mean, you know, depending on whatever it is, it's going to have a different thing. That's just a weekend gap. It's nothing. It's nothing special at all. But everybody wants it to fill in. You know, it is what it is, right? Why should I be looking at the CME? I don't have any reason. I don't trade the CME for Bitcoin. So there's no reason to worry about it a whole lot. You want to look at the charts that you're trading, guys. Don't worry about other charts. I see a lot of times people are trading spot Bitcoin, but then they're trying to trade it based on derivatives charts, which doesn't make a whole lot of sense because it's two different markets. They all contribute to price discovery, but what happens on your derivatives may not happen, or may happen in greater amplitude than what happens on your spot market. So, you know, again, guys, you want to be sure to trade chart what you're trading. Let me see here. Let's see here. Black Beauty Machine says Omicron is a 1963 sci-fi film in which an alien variant takes over the dead body of an Earthling to learn about our weaknesses. How poetic, right? Let me kind of catch up with you guys here. Hank says his Euro USD long is doing fine. Very short-lived, of course, right now. Especially if the dollar continues rallying like it has. You know, if you want to throw in this right there. This is the long that Hank's talking about here. That one right there. You know, otherwise it's been this nice breakdown through it. So yeah. But, you know, again, if dollar continues going up, so euro continuing to go down. We'll see what happens here. We could have a larger pullback and then figure back up. Right now, I'm looking at it, like I said, as we're looking at it here. Let me turn that off. And so, you know, right here with a 4, potentially a 5, especially with the breakout above B there. But, you know, maybe this is a 1, 2, 3, 4, 5 here. It's possible. It's possible. Wave 1 is down here at around 94.309. So we've got room. I mean, this could be an A, and then we get a B, 3 up here. A, B, C. And we get a C down, and you know, it stays well above wave 1, so it's still fine with a 4. But right now, looking to see if we can get some further upside with that, of course. Data says, I suppose it's safe to say Germany is doing all they can to keep Hank Long happy. Let me see here. Thoughts on Zen and Horizon's new Zendu launch? Again, I don't do a whole lot of fundamental anything on it. I don't worry about that. You know, because we find out that most of the time it's not really relevant. People will say, oh yeah, look, it was because they were such a great team that they did so well. But then if you look at everything else is going up as well. So again, we go back to the idea that if Bitcoin's doing well, everything else kind of goes, you know, a rising tide lifts all ships. So I don't really look at all that and worry about it. We've had a lot of things come out with a lot of big promises, you know, at the ICO stage in 2017, and everything that's going on, you know, this bull cycle. And, you know, so far, the market has just proven that it doesn't matter what kind of team you have behind it or whatever. All that matters is if Bitcoin's really doing well or not. I mean, that in general, that's all that really matters. So I don't really do a whole lot because it ends up being nonsense, to me anyway. Yeah. Will the dollar stay above? I think it's going to continue higher. Yeah. We won't know until it does, but I think it's continuing higher. Again, I've got my count in there that I've shown you guys. So, you know, again, coming off that low down here. Those of you that were around following me back then at the beginning of the year, you'll remember I mentioned that most of the time currencies have a macro reversal in January, early January, and that's what we have this right here. This is right around the first week of January. And then it came back down, dipped back down here again in May. And it's just continued to kind of rally on over since then. So nothing here signaling that it needs to or is going to reverse, head back below here anytime soon. That could still happen. It can always happen, but getting above this swing point right here, this wave 4, right here, wave circle 4, was the first clue that bottom may be in. Now, if we look at my other DXY chart, let me just set this up real quick. If we look at my other one, you guys have seen this one before. Let's see here. I think this is it. Let me kind of get down here. No, this is just something else I'm looking at here. Look, I was looking at the possibility maybe this is corrective here, so a WXY maybe. Even if so, it looks like it would have further up to go here. It looks like even if this was to be an AB, and then you'd have 1, 2, 3, 4. You still have a 5 to go for a WXY. But in that case, you're getting a pretty big extension on that Y wave. So you're going to be up here almost around the 2.0, almost twice as high as wave W. And that should have you leaning toward it not being corrective. Oops. But where's my other chart I'm looking for here? Oh, it's the futures one. That's what it is. DXY futures. Where are we going here? Dollar futures. There we go. That's what I'm looking for. So here we go. Here's the bigger picture, I guess, on this, if you want to look at it this way. So you can see right here. We'll get that nice channel breakout, comes back, retests. Remember, we were looking at the possibility that maybe this was a head and shoulders here with a double head. So left shoulder, double head, right shoulder, we get the breakout. So that inverse head and shoulders pattern target is up here at around 98.725. First step in confirming this possible macro bottom here was the breakout above wave 4 here, which we got. This blue swing zone right here, that target is up here at 97.77. So again, could be, WXY up there, but really you're getting close to that where wave Y would be twice as large as wave A or wave W. And, once you're getting over 1.618 to 2, it really is most likely a third wave with it. But we'll see. It can still potentially be. But again, if Jay Powell is going to, if the governors there are going to get, the board of governors there, the Fed, if it's going to, speed up tapering and speed up the timeline in which they're going to raise interest rates, that's all dollar bullish. There is nothing dollar bearish about that. That is all dollar bullish. So, I mean, we're kind of stuck with that. If you want to look at fundamental on something, that's what we're kind of looking at there. So, yeah. See here. Let me see here. Michael says, I understand the DXY is just a comparison of the dollar to other fiat currencies. In a global depression, is it possible for the DXY to increase as other fiat currencies lag USD, but economy collapses? Sure. Yeah. Yeah, again, guys, if you don't know what he's talking about there, the DXY is just a weighted index. And so what that means is it takes these various dollar pairs and then it weights their value into what gives you the DXY. So this value, this 96.095 right now, 58% of that is based on the Euro USD value. And then 12 or 13% more is based on the USD yen value. And then you have the rest of them, which are like, 5% and less that make it up. So really almost almost strictly, DXY is just a mirror of the Euro USD, almost strictly at all times, because that Euro USD makes up, again, almost 60%. The next closest one is the USD yen, which only makes up 12 or 13%. So the two of them together, if the Euro USD is going down, the USD yen is going up. I mean, heck, man, you got almost 73, 75%, 72%, whatever, of the value of the DXY dollar bullish. So yeah. But yeah, again, people in times of stress, in times of concern, of worry, people tend to go to the dollar. They go to the dollar because, first of all, you want dollars. You want to be liquid. You don't want to not be able to have dollars to buy things if the economy's going to hell, right? Second thing is, if you're a emerging economy, for instance, something like that, debt is great as long as inflation is still going, because you're paying off debt in the future with cheaper dollars, right? It's all good. If you hold U.S. debt, it has to be paid. By law, it has to be paid in U.S. dollars. So there is a demand for dollars, right? And so as the DXY rises in value, anybody that's holding U.S. debt that they have to pay, it becomes more and more expensive for them to pay it, which is very harmful to something like an emerging economy, which doesn't have a lot going on itself, plus its own currency is devaluing against the dollar, right? So there's going to be a lot of flocking to the dollar. It's a safe haven if things go to hell. So yeah. Not Z, what's going on? Saying checking in from Pakistan. Good to have you checking in, my friend. But yeah. So that's what we're kind of looking there with what's going on here. I think fundamentally, I think the dollar's one of the best. I'm not a big person in terms of fundamentals, except for more along the lines of macro. Because I'm a macroeconomist, so I a lot of what I view as what's going on in the world, is from that large lens, right? But I think that's the best place you can go for fundamental stuff, and within that, the dollar is strong for fundamentals. What's going on with the economy, what's going on with these things fundamentally, can give you a good idea of what's going on with the dollar. Again, when you think of, okay, is Jay Powell and them going to come in and speed up tapering? Are they going to come in and raise interest rates a lot sooner than what they were saying? Again, both of those things are very dollar bullish. If you're holding a currency, a lot of the value of your currency comes from that interest rate. Is that interest rate greater than another currency that you're looking at? If you're looking at the USD versus the euro, is the interest rate we're paying on the USD higher than the interest rate you're paying on the euro? That right there is a huge thing, because you can make more money loaning out those dollars than you can loaning out those euros. And so that gives value to your currency when you have that higher interest rate. Again, I talk about trading Forex from early 2000s to 2010 area there, and how we were just constantly long the Aussie dollar against the dollar. The Aussie was just insane, man. They had such a great interest rate going on. It was a fantastic carry trade to be long that Aussie. And so, again, that kind of thing will play into it. So, fundamentals as far as what is your country doing in terms of your currency, I think that's the best place that you can look for fundamentals. It's probably one of the very few places I actually look at fundamentals. Still trade the charts, but the fundamentals help confirm a lot of what's going on in those charts. My opinion on gold, let me see here. And I've got an Ethereum Bitcoin chart I'm going to pull up here in a minute as well, guys. Let me see here. Gold. There's gold. Yeah, so there's gold. Again, my big picture is the idea that we're potentially doing this flat here, where we've got A, we've got B, and then we'll have C coming down below A. But we're still going to watch what goes on here. It's possible that we can still have this flat, and C can just find support here in this $1,200 to $1,400 range at this very high volume node here. And it would just be a running flat. So you'd have your wave 1 up here, and then A, B, and C down here for your wave 2, and then it would pop off. So, I mean, that's still possible. But if we break down below that $1,300, $1,200 kind of area, I think we're probably coming down here at least down to 1,000, potentially down closer to 900, 850 down here. I mean, if we look at this, it's untouched at the moment. Let me kind of zoom in a little bit more here. We've got this nice demand range down here, and the EQ of that sits there right around 840 or so, but it's untouched. It hasn't been touched yet. So, you know, if it comes down here, if this is a flat, all it needs to do is print 5 waves down that takes it below wave A, and that would get you right here around that $1,000 mark for it heads up. But right now, we're still kind of just moving locally here, sideways. Let me see here. And so I'm looking for a breakdown below this ascending channel support. And then we can kind of get on down there. If we get wave B sits here at about 1721.10. If we're dropping below that in 5 waves, that should give us a minimum wave 3 target down here, 1494. And right now I've got this as a 1, 2, and then this would be 3 of 3 right here. So you get you a 5 down here a little bit lower, maybe about 1400 or so, and that would get you your wave circle 3, wave circle 4 back up, and then wave circle 5 coming down, you know, as it does it. So again, we'll see how it plays out there, but nothing's really changed at the moment. We had this descending channel. Everybody and their grandmother was really stoked about this descending channel resistance. We broke out above it and got sent right back down. Look at the volume. This volume, if you pay attention to this volume spike here, it's already broken out. It's right there above it. And price just goes a little bit higher before getting rejected. And then right in that same area right there, we get this breakdown right here, this big, large candle on the breakdown. And then the next one breaking it down. It rallied up a little bit here, getting rejected. Starting to move its way back down there now. So yeah, that's what I'm kind of looking at the moment here. But you know, guys, always have more ideas. You know, it's not just about what's going on. Like I said, my big idea has been the same. It's been for a few years now. If you guys have been following me since, or if you've been in Discord since, you know, 2018, you know, we called this big, huge rally up here. It went a little bit further than I thought, but we did get the rally. And then we always had the idea that it was going to pull back down there below wave A as a flat. And so, you know, that's still my main idea. But again, as I showed you, keeping an open mind around that 1300 area, seeing if we actually make it below that that high volume node there or not. So yeah, if we do make it below it, I mean, that just opens up the move down, you know, much further. But if we don't, if we can get a good rally off that and we've got 5 waves down into it, it would suggest that maybe we've just got a large running flat here going up. So yeah. Let me see here. Let me see. I'm trying to figure out what you guys are talking about here. TV Canal, I am not a bull. I'm not a bear. As I continue to say, I'm long money. That's it. I don't care if the market goes up or down as long as I'm in that direction. So it's all about invalidation and validation levels and proper risk management. I'm not a bull. I'm not a bear. Just long money, right? I know it's hard for a lot of times if you guys are newer traders to understand. You know, everybody talks to you in terms of bull bear. But you should just think of it in terms of price rising and declining. If you do that, change your candles to black and white. If you do these things, guys, so much of that emotional stuff is going to be off your shoulders. Yeah. Let me see here. While I'm looking at gold, do you mind comparing it against XMR USDT, please? And thank you. Against XMR USDT. And XMR, whoops. USDT against Monero, huh? Let's do this here. Where did I just put? Oh, I put it over there. Okay. Arithmetic is there. Just do that? I did. Okay. Let me just go ahead and take off these candles here on this stupid thing. Line, there we go. Get something easier to see here. Okay. Actually, you know what? Let me do this another way. I'm throwing on a different pane. There we go. All right. Let's go ahead and take off all this other stuff. Let's see here. It rallied up into this drop here. As it went up, it dropped. Down, going down. Yeah, it's going sideways, sideways. Yeah. I'm a bear because I have a huge beard. I'm in Texas. We have beards. But yeah, so I mean, if I'm looking at this, I mean, yeah, I mean, that's what I can see there. But I don't know if it's really anything noticeable because you have this rally up into it all through this here. You see, so all this right here, you were kind of going sideways. Yeah, maybe. Going sideways, and this rallied as this came down. This ran up, this dropped, sideways, sideways, yeah. Yeah, definitely change your candles to black and white. I'm not even kidding, guys. There is so much emotion in red and green candles, red and green volume. People start talking about, oh, it's bullish volume or bearish volume. It's not. The color of the volume candle just tells you whether, or of the volume bar, just tells you whether that candle closed above or below where it opened. That's all it tells you. It doesn't tell you if it's bearish or bullish. But, you know, new traders come in and they think that. So, yeah, turn all your volume candles black. You know, white on the advancing and black on the declining candles there. And it'll do wonders for you guys. Yeah. You're looking at it. See, look at how this looks here, all this red and green. It's all Christmassy, but, man, that can get you emotional, right? It's not so emotional here. So, yeah. Let me see here. Let me see here. I'm a dollar bill. dollar bull. Nah. I just, you know, expectations. It's not really being dollar. Like I said, it really doesn't, you guys, I don't think, I'm not talking to tell you writers especially here, or particularly, but I don't think you guys, if you're new, you really understand when you're trading, when you've been trading for a long amount of time, right? It doesn't matter to you whether something's going up or down. If you're a trader, you're a trader. You just care that it moves. And then you get in with the direction of the move. That's all. I get no special feelings if the dollar, if the DXY pops to new highs or drops to new lows. I just want to be in it either way, right? Or in it in other instruments that are affected by it, with it. So, yeah. I mean, no bull or bear, just like I said, long money, right? By the way, I hope we're going to have all that t-shirt stuff and whatever out before Christmas. I think it'd be kind of cool. Polo shirts, whatnot. Long money. Silver, though. Silver, again, we'll look at gold, so look at silver here. And then we'll jump over to Ethereum against Bitcoin. There we go with silver here locally. Same idea. We got a 3 looking on a 4. It looks like we're heading for a 5 down here toward the S1 pivot on the 4 hour. We've got some bullish divergence trying to build here. We've got large volume coming in on the breakdown. Bigger picture on silver is still this very large range here that started back over here around July or August of last year into now. Again, I still remain concerned about this huge spike of volume, and then the spikes of volume around it here, up here at the high. That to me is concerning as far as continued bullishness goes, because you got it, and then we're breaking down. We've got follow through to the downside afterward. Again, you have all this volume popping out at the top. That's that's supply coming in. That's supply trying to send price down, and it worked. And so the question then now is, what are we doing here now? I've got this potentially as a 1-3 up here as a 2. We've dropped down below wave B. That should be telling us that we're heading down here, and if we are, and then this is if this is a 1-2 here. And by the way, this is wave B up here. So this is wave C, so it's going to be 5 waves down. That gives you this wave 3 down here around $11. Right? And just real quick here, if we're to look at if we get that $3 there, no further, potentially gives us a wave 4 at 13.46 or 15.21.50, which would then give us a wave 5 potentially around $9 or so, below the $10 mark. Yeah, so we'll see. Right now, that's the way it's kind of looking here. Again, similar to what we had here, as it rallied up into this swing high here, we got this very large spike of volume right here. And again, no follow through. It just kind of went up just a little bit. A lot of just some overlapping dojis and reversal coming on back down. And then right here, we've got the volume expansion on the decline here, and the candle spreads got larger into that. So you've got expanding volume and increasing candle spread telling you that the trend is down in this way through that. It's not just a simple, oh, we sold here and then we didn't do anything. They kept selling into the bottom of that move. Then pop back up, and now the volume's starting to pick up again as we start going down here. So it's like they're still selling into the lows. And that's usually, a sign of obviously bearishness, if you want to call it that. So, again, not looking so well there either. We'll see what happens. Let's see. Let's see here. What was I going to look? Oh, Ethereum. Bitcoin, right? Yeah, so still my same chart that I've had here, guys, that I brought out a few times. We're continuing as expected. Let's see here. We've broken out. Not quite above the swing high here. What's this swing high? This is 82.37.889. And this is 80.97.08. So, just a little bit higher. It'll break out above that wave 3 there. And then looking at this, we've broken it above wave 1. So, I mean, the only thing that could possibly change here, if you wanted to have something bearish happen here, or if you needed to think there was, you could have an ABC, and then an ABC, and then 5 back down below this swing low here. I mean, that's still possible. But right now, I've got this as a 1-2 and working on wave 3 up here with a minimum 0.099932. Right there, that's what I'm looking for. Unless we just happen to get an ABC here, and then we'll get 5. And if we get that and it comes back down, I mean, then we'll have to look at a 5 below, most likely below this swing low over here. Oh, man, wouldn't that kill Ethereum holders? To see Bitcoin, I mean, they're all relishing in this, this Ethereum outperforming Bitcoin, which you should be expected. I mean, Bitcoin's so large now, most things are going to outperform it, right? Most alts, but so much being locked in there. I mean, that kind of move down, that would be a pretty big move on Ethereum coming down there. Let's see here. Oh, that's the wrong one. Let's try again. Maybe it's not here. know which one it is. I have one specific chart that I'm looking for, but I'm not sure where it is. Well, I guess I'll just pull in this chart then. I mean, here we go. We've got wave 5 done here. So wave 2 should be done. That gives us a minimum wave 3 up around 7,500. Locally, this impulsive breakout here, look at that volume. Now that's at the top. Well, it's not at the top here. Let me see if I can figure out where that is exactly. That's going to be... Is it the top one? Yeah, it is the top one right there. So significant volume coming at the top there, which is just this resistance. So you expect that. You should expect that. Now the question is, do we have follow through or does it reverse and head back up? And that's what we're going to look for. So right now, possible pattern target up here. I'm not really excited about this channel, but maybe we got a pattern target up here to around 52.12. I'm more interested in what's going on here at the moment, which could be like a 1, 2, 3, 4, 5 maybe, or 5 coming up. A breakout above wave B here at 48.05 should indicate that wave 2 is done and wave 3 is in progress. The odds are around here, or a little bit higher here, we're going to get one wave done, pull back for a second wave, and then a third wave up. 3 of 1 of 3 or 3 of 3, however it plays out there. But nonetheless, looking for that move up towards 7,500. As long as this wave 2 low holds. If we drop down below that, that'll invalidate it. So that's just that swing low right there at 39.20. Yeah. Blaze asking, is the idea that the bigger it becomes, the more stagnant mass adoption it will eventually be, leading to most alts outperforming it? Yeah, so, again, a lot of people out there, oh, Bitcoin is money, No, and that's just people that don't know what they're talking about. It can be used to purchase things, but that doesn't make it money. Again, we trade for things all the time, right? We give somebody... whatever $1,000 baseball card we have for some, for a couple of headers for the car, right? But so there's trade, but that doesn't make it money, right? Money has a specific meaning, right? So Bitcoin is not at that stage where it's money at the moment. It can still be traded for things. But as you get a larger adoption and there's more and more liquidity in there and whatnot, for it to become money, it will eventually find a point where it won't move a whole lot. Like now, it's still extremely volatile. You can't have money that's extremely volatile. Because who wants to get paid today? I don't know, say $1,000, this week, right? And then the day after you get it, that's only worth $800, right? Now, as long as it's worth $1,200 that next day, you're like, hey, yeah, this is great. But the minute it's worth less, all of a sudden, life becomes a lot more difficult, doesn't it? That's why all this nonsense of getting paid in Bitcoin, it's just nonsense. If you like Bitcoin, you believe in it, get paid in dollars and then use whatever portion that you want to do to buy Bitcoin. But if you have bills that need to be paid, getting paid in Bitcoin is ridiculous. Because there is no guarantee. I mean... if the value of Bitcoin goes up this week, well, hey, okay, you can pay your bills and it's going to come out better for you. But if the value of Bitcoin drops this week, guess what? Life just became exponentially much more difficult. And this is especially important to recognize for people that have limited incomes, that have more bills than money, And again, none of that means I hate Bitcoin. I always say stuff like this, and then people are like, oh, you just hate Bitcoin. Some stupid like that. I mean, it's being realistic, guys. It's about being honest with yourself. Why would you want to put yourself in that kind of situation? Imagine finally deciding, imagine all the businesses getting involved, and finally at the top of this bull cycle, your company says, listen, we can pay you in Bitcoin. You go, yeah, do it, man. 100%, let's do it, right? And then you hit a bear market. And at first, you don't change it because you're thinking, this is just a pullback. I'm okay. And it keeps pulling back. You're like, but I'm good. I'm gonna hold, right? And then it gets done with wave 1, and you're just about to get out of it, and all of a sudden it rallies for wave 2, and you're like, see, I told you, man, I'm good now. Rallies up for wave 2, and then it starts pulling back again, and you're like, nah, look, it's just a dead cat, bounced lower, it'll come back up, just like it did. And then it drops below wave 1, and you're like, crud. And all that money you've lost in terms of value of your Bitcoin during that time, and the struggles that you've had to do to pay your bills, and it's just gotten worse. You find yourself behind the 8 ball now. Maybe you've taken out some short-term loans, right? Against your Bitcoin. Maybe you've taken out loans. And then it keeps dropping. And then it drops hard because it's wave 3. So now all of a sudden, you're about to get called. They're going to start selling off some of your Bitcoin that you've used as collateral for those loans. Or you go ahead and sell the Bitcoin to pay that to get out of it. And I mean, so now not only did you lose the value of what you had in terms of Bitcoin, right? But you also then have that added loss on selling at a loss. That's sadly the reality if you're just getting paid in Bitcoin. And that's why Bitcoin is not money yet. It's a small bit of reason why. But you can't have it as money if it's not stable. It's got to be stable. You can't have wide fluctuations in price. Would I suggest mining Bitcoin at home with GPUs or something? Oh man, no, I don't think so. I think the era of making any kind of killing mining Bitcoin at home is long gone. You have to have a lot of money, lots of miners, so that you can sign deals with your energy provider, so that you get a lower rate, because you have to pay all those costs. And think of it now. Think of it. What if you do it now and the top comes in sometime in the next 6 months? Think about that. Now you've got all these bills that you had to pay all this time, and you barely mined anything. I don't think it's a very good move. That's just my personal opinion. I'm not interested at all in doing that right now. It makes no sense to me. Because those electric costs are what's going to kill you with that. Those electric costs are high. And and then you have to look at your competing against all these other miners out there in these mining farms, right? Which have thousands and thousands of miners. I think you make better money just trading, or even swing trading intelligently. I think it is better spend money, but only if you're using proper risk management, and you really kind of figured out a way that works for you to trade pretty consistently, profitably. Yeah. Let me see here. You've heard that, is that Jello Man? You said you've heard even that Bitcoin is a Ponzi or MLM? That's a funny way about it. Yeah, I don't know that I go that far. It's just new. Bitcoin itself, I wouldn't really consider MLM. MLM has a certain structure to it. Multi-level marketing, You have to have people under you, and then you get portions of payments from them go to you. Yeah, you don't get that with Bitcoin. Ponzi scheme, I don't know that I'd even call it a Ponzi scheme. I think it's just new technology, and it may or may not, become second nature with all that. I think it's got a good chance of doing it. I think it's got a good chance of remaining, of hanging around. But, we can't guarantee anything, guys. Again, you have to remember, and I know you don't like me saying that, right? But let's be realistic. Bitcoin has never been in a recession or a depression, right? Never. As a matter of fact, let me show you something here. Let's do this. Let's go to the weekly here. Oh, it's not so good on this chart. This is Coinbase. Let me change to a longer term chart here. Well, you know what? Let me BLX. Let me throw in the BLX right here. Okay, so here's the Papa chart, right? It's a big chart from 2010 on up. Now here's the thing. This one right here. Let me throw in the dollar here real quick. Right there. Okay. Let me go ahead and change the dollar to a line chart here. I'm showing you something here. So right around this area, this 2015, 16 kind of area, we were slightly deflationary during that period. And look what happened with Bitcoin. The value of the dollar rallied strong. Bitcoin dropped. So if we're heading to that point where we're potentially heading into deflationary territory again, it stands to reason that Bitcoin will drop off. Now, by the time we hit that, it doesn't mean it has to happen yet. As you can see here, we've still got a bit of higher high here, even as this has risen. So it's not necessarily something that needs to happen right away. But at some point, if we do get deflationary with the dollar, at some point, not too long off, those that are still buying here are going to decide, the big ones are going to decide it ain't worth it. I'm buying a risky asset that's devaluing because it's going to start going down, relative to the dollar. So, I mean, again, guys, there's all these things that you need to keep in mind. Don't just blindly go out there and say, oh, rah, 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 dollar or whatever. Rah, 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 Bitcoin or whatever. Be smart about it. I think we still got further upside. I think we still got, heading up toward 100,000, right? But we need to do it. So, yeah, just paying attention to what's potentially going on, right? Let's see here. Just going to catch up with you here. Let's see here. Boris says the time of mining private is over. I mined back in 2017. Yeah, I really think it is. Again, I don't know everything there is to know about Bitcoin mining and whatnot. I know a bit. But just in terms of, thinking in terms of economies of scale and whatnot that you actually need to really kind of to take advantage of it. You can't do it as a personal mining anymore. And I don't know that the return on Bitcoin over 5 years or 10 years is enough to compensate for that lack of economy of scale as a private miner. I honestly think that there's a lot better ways to make money in that same period of time, to make probably even more money, probably much more money over that next 5 to 10 years than it is to mine. Yeah, but it's just my personal thoughts there, right? Corey says, I don't think you can just apply that logic of an increasing dollar comparison against Bitcoin. Thoughts? I just gave you my thoughts. Yeah, I think you can. Everything is relative to the dollar. If the dollar's going up, as I've already showed you here, you say you can't, but I don't know why you would say that when I just showed you here, when we had that deflationary period over here, Bitcoin went down, the dollar rose, flew up. This is the Bitcoin dollar chart. This is Bitcoin in relation to the dollar. If the dollar's rising in value, Bitcoin's going to go down. If the dollar's dropping, Bitcoin's going to rally, right? Now, there's some overlap in certain areas, sure. Especially as it was newer here, coming in here. But as it becomes more and more mainstream, then again, you have to understand that big money that you guys are all excited about, those big people coming in, they're much more attuned to what the dollar is doing, what debt is doing, what treasuries are doing. The Bitcoin is just part of their overall portfolio. And so we're talking lots of money, right? Tens of millions, hundreds of millions, more, maybe more, right? And so they're not just, oh, Bitcoin's it and that's all there is to it. If the dollar continues to rally, that's a good pressure for them to get out of risk on assets. Right? I mean, this is just, I would say common sense, but the funny thing, people say, oh, what this world needs is more common sense. Well, the problem is, if you don't have any understanding of the subject matter, then you can't possibly have any common sense as attributed to that. Common sense means that you understand what's being said, that you have a base of understanding in that. But people tend to use it as again, language, right? Like weekends, people tend to use it as a derogatory remark. It's not what it's meant to be. But again, when it comes to Bitcoin, it's been in this secular bull market that we've had. It's never been, other than that deflationary period there, it's really never been in anything, any significant economic downturn. But it is an extremely risky asset. And we know that when the economy turns down, we know that people flee risky assets. They go to risk off because they don't want to lose the value of what they have. So, I mean, we extrapolate from that if Bitcoin's going to, that if the economy is going to roll over at some point here, then Bitcoin should also roll over. Now, does that mean it has to happen? No, it doesn't have to happen. But historically, it makes no sense any other way, right? So, yeah. The available Bitcoins to mine decreases every day. So isn't there a point that comes that you can't do that comparison as money keeps getting printed against a finite supply of something? No, you've got multiple things you're not understanding there. First of all, it doesn't matter how many dollars are printed. It matters how many dollars are currently going after the same products. So the Fed can print everything it wants. Most of that, as I continue to explain to y'all, goes into the banks, into the reserves in the banks. Real money creation happens at the bank level when they make loans, okay? So the Fed can print all the money it wants. It sits there in the banks. It doesn't actually enter the economy unless people are over there actively taking out loans. And if you're not actively taking out a loan, the money just sits there. So if the money sits there, it's not into the broader money supply chasing after the same products. So it doesn't make a difference that all that money was printed if it's not out there circulating, right? It makes no difference. Money sitting in the bank it does nothing for the economy. Negative, that is. As far as prices, right? And that same thing happens when people save money instead of spending it, when they save it, when they pay off debt. Just like loans are money creation, so that happens at the bank level. That's where real money creation happens. That's the money that actually comes out into the broader money supply. But if you're going and paying back your loans, that's money destruction. You're paying it back. You're taking money out of circulation and destroying it. You're paying off your debt. So if you're paying off your debt, if you're saving money, if the money is printed by the Fed and it just sits in the bank, all of that, at most, has no positive rise in prices, and actually tends to be disinflationary, at least, if not deflationary. As far as Bitcoin only mining so many, who cares? Guys, I think there's such a big misunderstanding because of Plan B and his little thing with his little chart. The idea that scarcity is all that matters. If scarcity was all that matters, my toenail clippings would be worth a ton, right? No. Supply matters, yes, but only if there's demand. If you have no demand, it doesn't matter how little supply you have or how much it keeps decreasing. If there's demand and the amount of supply decreases, then yes, that's something. If you want to argue that something's of value just because there's less of it printed every day or minted every day or whatever done, mined every day, well, again, that falls short. Because once that demand isn't there, it doesn't matter. It doesn't matter because there is no impact on that. There's no demand or significantly less demand, right? Does that make sense? And don't take this as me kind kind of getting young. I missed your previous comment. Let me see here. Doesn't a dwindling supply of available Bitcoin? Okay, so there, I just answered that there. Yeah. And I'm not trying to, again, put you down or anything. I'm just trying to get you to think beyond the simple things that are out there right now that people want everybody to buy into. Yes, dwindling supply is a boost for price if there's the same or increasing demand. But if demand drops, then the effect of that dwindling supply means less and less the further that demand drops. Right? People don't want to buy something just because there's few of it out there. Again, my toenail clippings would be worth a bundle, right? But they're not. Because who wants to own my toenail clippings? I don't even want to own them. And so it doesn't matter that there's a limited supply of them, right? Or that there's a dwindling supply of them if I waited longer and longer to clip them. Because there's no real demand there for them, right? There's no similar or increasing demand. Yeah. Do I study or pay attention to anything? Not religiously. I look at them occasionally. But they don't say anything that the charts don't already say. So yeah, as I show you guys week after week here. Yeah. So I don't really spend a whole lot of time looking at them. I think some of those on-chain metrics are going to need to, they'll end up being more and more insignificant as time moves on. For instance, this idea that the amount of coins held on an exchange means something. No, it used to. Nowadays, though, with the big money that comes in, much of this big money needs to be custodied. Because it's, whatever it's a part of, right? Whether it's some company or some financial firm or something, right? It needs to be custodied by law. And so those, it makes all these purchases. Those coins, whether they want to or not, have to come off the exchange to go into custody, to be custodied by a company, right? So they're automatically, but that doesn't mean they can't just jump on. We've shown you that when we had a couple, like this drops over here, right? We've shown you how, the less and less supplies it was going up here, and then all of a sudden the supply showed back up onto the, got sent back to the exchanges, and we got all this downturn there. So, depending on whatever the metric is, I think, a lot of them are going to be not really worth anything, down the road. Right now, a lot of them still could say that, but again, it's the same thing you see on the charts. If you understand what you're reading with the charts. Yeah. With the S&P looking for a third wave down, do you think it will drag Bitcoin down with it? Bitcoin is not going to go down because the stock market goes down. If it goes down and the stock market's going down, they're both going down because the dollar's going up, because it's a risk-off environment. That's the reality of it. They're just both responding to the dollar. But I think that's the way we'd be looking at it. So, and you ask, okay, well, why is Bitcoin still rising right now if the dollar's rising? Because, realistically, this is the range here, right? So we've been going kind of sideways here since March of 15 here with the dollar, right? This whole thing here is a range. So technically, price is still within a range. And as long as prices or DXY is still within a range, and as long as it's within a range, big picture-wise, Bitcoin can continue to rally against it because it's not making any definitive movement up or down. It's just within the range. Now, the closer it starts getting, if it gets up here toward the swing highs up here or breaks out, I think that's your cue. You're going to see Bitcoin drop down. The closer it gets toward those areas, the more likely Bitcoin will be seeing selling pressure. But while it's still going within this range right here, this orange range, for all intents and purposes, on the large time scale, it's just moving sideways within a range. And like I said, as long as it's doing that, this uptrend remains with it there. Okay. So I think that's I think that's probably the best way to understand that. I know a lot of times people want an immediate response to what's going on with the dollar, but again, Sometimes you'll get it in certain areas, but in the grand scheme of things, Bitcoin, I feel, can continue to rally here until the dollar starts reaching this upper end of the range here. I think at that time you're going to start seeing maybe a top out of Bitcoin or real cautiousness coming in. And if we break out, well, this top of this range here in this orange, I think, Bitcoin, again, all that big money that in there that you guys got excited about that came in comes with the other side of the double-edged sword, which is that when the dollar's on a rampage, they're not interested in sticking around in Bitcoin. Most people, because it doesn't make a lot of sense. You don't want to tie your wealth, tens of millions of dollars or hundreds of millions of dollars or billions of dollars into something that's depreciating 50, 80, 90%, right? Most normal people are not going to do that. It doesn't make a whole lot of sense. If you believe in Bitcoin, well, heck, you take your profits at the top and you wait for it to bottom out, and then you buy back again with a much greater profit now. You don't have to prove that you believe in Bitcoin by holding through big, huge drops. Now, if your investment time scale is, time frame is like 5 years out, 10 years out or something, well, then maybe you hold through it, right? But, if the economy starts showing signs of a recession or worse, most of these larger people, because they have a lot of debt too. They have a lot of debt that has to be covered. And if your Bitcoin is sitting there and you need money, let's say, to pay up some debt that's coming due because your company isn't doing so well because sales are down because the economy's tanking, and you have to sell your Bitcoin, well, now you may be selling your Bitcoin at a loss because it's already in a downtrend, right? So not only did you not profit at the top, you may not profit at all depending on when you got in. You have to sell it for a loss. That's huge, guys. It's huge, especially when you think in terms of tens of millions or hundreds of millions or $1 billion or something. That's a huge, huge bit of loss. And most people are not going to be willing to jump into that. And I imagine that you can't blame them, right? So yeah. What are your top 3 indicators you look for a Bitcoin top? But generally we're nearing the top. Large time frame distribution, volume price action analysis. Again, as I told y'all when we were right up here, remember it was right up here and I said we're probably coming to some sort of top. I said because we have all these people talking about laser eyes and spaghetti arms and I don't even know what all those silly things people were saying. But if you were following me back here, remember I kept mentioning it over and over and over again. And then we topped, came down. So sentiment analysis via euphoria, like that. But it's not simply enough to say, oh, everybody's saying it. You have to understand how it is. Again, I didn't say it until that point, even though we had other things going on over, in this area. But yeah, those are 2 big things I'd probably look for. I don't know that I really look for anything in terms of indicators here. Yeah, no, those would probably be the 2 big things for me. I'm trying to think if there's anything else really to help you. I mean, if you've got Elliott wave, you can use that to kind of find projected tops and possible wave counts, and that'll help you as well if you know what you're doing there. But my biggest thing is looking for large time frame distributions. A distribution range is starting to come out. Yeah. Let me see here. Let's see. Super top indicator, Peter Schiff buys Bitcoin. Oh my gosh, hey, it's after 1 here, guys. So I've got to get out of here. Man, guys, I've really appreciated you guys joining in and asking questions, honestly. And especially when I may have given you answers that you were not wanting to hear, and you continue to still be respectful and whatever. I appreciate that. Because, if you spend any time around social media, that usually isn't the way it goes. So I commend you for being awesome human beings. Again, guys, I'm not here to get you to buy or sell anything. I'm not here to scare you or to do anything like that. I'm just here to talk about the charts, what I'm looking at and why. And you know what? If this is your first time here, or your first couple of times here, continue to hang around, and you'll start getting used to how it's done, and you'll understand that that's exactly what I'm doing. I'm bullish for Bitcoin overall, and I say that just meaning that my thoughts about Bitcoin overall, I think we've got further up. Now, am I really a bull or a bear? Not really. I'm just long money, guys. I'm interested in buying it as it rallies. I'm interested in selling it as it declines. And I think that, if you want to, again, spoken to somebody who's been doing this for a quarter of a century now, if you want to be successful in it, I think that's really the mindset you need to have. Take the green and the red off your charts, off your candles, make them black and white, make your volume all black. Even your indicators here, you'll notice mine are black as well, right? And then I got this red line here just because it sticks out. Make it whatever color you want, but I've just got it because it sticks out. You see those crosses. This, I don't usually have MACD on here, which is why it's all colored in there. But yeah, the goal here, guys, and I can't say this enough because I know a lot of y'all hang out on social media, and there's a lot of misinformation, half-truths, and outright lies out there, okay? And what I want you to do is I just want you to be aware of that. I'm not going to tell you who to follow, who not to follow. I just want you to be aware and to be honest of the situation, what's going on there, so you recognize what they're doing and that it may not be what you think it is when you're emotionally really excited about something. And that way, you can protect yourself in case things go wonky. That's what it's all about. Being on here is not about being right or wrong. It's about making money, guys. Risk management and everything. As I always say, the only thing you control in the market is how much you lose. That's it. All right, guys? Do not forget that. If you forget that, I mean, it's not good. Risk management is where you make your money, okay? Don't forget, guys, head on over to howtotradetowin.com and come up there and put in the code here. The code is CyberWeek 40% off. And you'll get 40% off the biannual or annual membership for Tier 3. Don't forget, this is the last week. This will be the promotion period to end here on the 5th of December. That's Sunday. It is the last time we will ever offer our services at 40% or greater discounts. So, now would be the time. If you've ever been thinking about it, now would be the time to jump on there and do it. We'll still offer discounts, but they'll be much smaller in the future. And again, guys, I know some of you may go, but really it is. When you're in there, you'll see how much content it is and how much you can learn in there, and then you'll understand why. But I hope you guys have an absolutely fantastic week, okay? I don't know what I said there. I appreciate you guys. Hopefully you'll come back on Friday. I'll be here at 11 a.m. Central Standard Time again, and we'll take a look at everything once more and kind of see what's going on there. But until then, like I said, guys, just, make sure when you're entering, you know where your validation level is, you know where your invalidation level is, and you're using proper risk management. If you're doing those three things, you're going to make yourself exceptionally more likely to make money. Nothing's ever guaranteed, but you'll be on the path to a lot more likely to do it, okay? Okay, guys. You guys have a fantastic week, and I'll see you all on Friday. Take care.